Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for you this week. Zack Pokorny from Galaxy Research will join us to talk about the future of DeFi, the evolution of tokens and these new things called ownership coins, the L1 wars and have they abated, and what the future looks like in the on-chain and CeFi lending market. Zack, among many other things, is the author of our great quarterly lending and leverage report. Check that out on galaxy.com/research. And of course, we'll check with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk about markets. And Beimnet's going to explain to us the precarious long-term situation for U.S. fiscal and monetary policy and some interesting sort of identifiers that have cropped up that give him pause. Before we get to any of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Phineas, my friend, hello.
Hello, Alex.
It's good to see you, man. This was a great interview with Zack that we just conducted.
Slightly different stylistically. Felt more like a conversational, sort of long-form podcast. I enjoyed it. You covered a lot of topics.
Yeah, and he and I, obviously, so Zack works on the Galaxy research team, and so, yeah, we took the opportunity to sort of verbalize and formalize some of the thoughts that we've been having around the shifting metas and narratives in the on-chain crypto environment, which has, I mean, my gosh, what a saga. 2017 was a long time ago.
Newsflash, Zack Pokorny, smart guy.
Yeah, he is, yeah, for sure. And Beimnet, too, we had I would say a little bit of a rowdy markets discussion with him. We're not doing the whole Beimnet's a bear thing right now on this episode.
Yeah.
Although he continues, even at these, sort of bouncier levels, almost 94K, he was like, yeah, like it's not a bounce until it's multiple weeks over the 50 still. He's still saying that. So.
And we're headed into the end of the year, and we got some really exciting episodes and content coming up.
We do.
Which I'm very
excited for.
excited
finish
for.
up this year, we have some very interesting content. I don't want to, we're only going to tease it. We're
Stay
not going to
tuned for
say
that.
it. Stay tuned. Well, that's going to be fun. We do have at least 2 more big episodes coming.
Absolutely.
Some of the biggest of the year. So for us, so that'll be cool. All right. Well, let's get after it, everyone, and let's get right into the show with Beimnet. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
Bitcoin's up a little bit.
Yes, it is.
We're still in the range, though, right? That doesn't feel like the regime has changed.
No, I don't think the regime's changed. I think you're in consolidation. You did have a huge move from 125, 126, all the way down to 79. That's a big move. And, now you're having a corrective bounce. I think for me, the key thing I'm looking at is kind of this 50-week moving average, which is, in and around 100K. I think historically, looking at this chart pattern, particularly for Bitcoin, you do typically see a retest of that level.
Even if you're coming
down,
on a longer downward trend.
Yeah. And so, I think for me, like, what would confirm that we're back is, like a multiple closes, kind of above that level on a weekly basis. But my bias is still for the fact that, the broader market top is likely in. It's just, the path is going to be like pretty choppy. And so you will have rallies. And, the way to think about it is just like have your levels in mind. And, if they break, then, maybe the thesis is wrong. But, I still think that the thesis is, intact.
Yeah. What's been going on? We've talked a lot about Bitcoin, and I appreciate that update. But what's been going on in the broader markets? Because it feels like we're kind of limping here into the end of the year.
Yeah.
Equity markets, they're not really limping. I mean, what is happening? What have the stories been? I feel like I've been out of it a little bit macro-wise last week or so.
Yeah. No, I mean, in terms of things that macro folks are paying attention to, it's definitely been pretty focused on fixed income. domestically and abroad.
In Japan, right?
Yeah, absolutely. And so, you've seen a pretty decent move higher in Japanese back end yields, 10s, 30s, 40s.
So it's people dumping the long dated.
No, it's just one, like a fundamental reassessment of like what's fair value for that part of the curve. Two, like what is the BOJ likely going to do on a go forward basis? And they're most likely going to be hiking rates pretty consistently, and like that in the context of a rate cut path that is pretty aggressive in the U.S. and a lot of there's a lot of optimism around Trump's Fed next year. And there's a significant amount of cuts baked in, but the data hasn't really turned that much in terms of the hard data in the U.S. For example, last week you had initial jobless claims print below 200,000, which is crazy to think about. And then today you had job openings beat by 500,000.
So some strength in the labor market.
Some strength in the labor market,
which reduces the impetus to cut and stimulate.
Correct.
Right?
Particularly when inflation is nowhere near target.
So where is inflation actually right now? I know I haven't followed it as closely because it has been improving. Where are we right now exactly?
We're at 2.8% in core PCE, which is still 80 bips above.
Right.
The
target. It's almost 50% above the target. It's almost a whole percent above the 2% target.
Correct.
So it's still elevated.
It's still elevated, and there are things that suggest maybe it'll even pick up on a go forward basis. Typically, the past couple of years after COVID, January's always seen prices come up a lot.
Interesting.
We know that people's premiums for healthcare are about to rise at the start of the year, and there's a whole bunch of other structural things that typically lead to late Q4, early Q1 kind of strength in the inflation data. And then if you're telling me on top of that the perceived weakness in the labor market is just really artificial, right? Then you can actually start to get some wage pressure on top of PCE being elevated. And so if you're telling me that labor market's actually okay enough and inflation still well above target, the fact that we have another 70 to 80 bips of cuts priced into the front end of the U.S. curve doesn't make too much sense to me. And I think that's part of the reason why you've seen an uptick in back-end yields in the U.S., right? If you thought that the U.S. was making a policy error in terms of their rate cut path, you'd sell the back end because over time, there's not enough value in that part of the curve to compensate you for where inflation actually is, and so and what's been really weird about this year and this cycle is that typically when the Fed starts cutting, right, the entirety of the fixed income curve starts to rally, right? But most recently, when the Fed started cutting from, when they were at 5% and change, the back end yields have actually been rising. And, as you've priced in a more aggressive rate cut path here in the US, you've just seen back end yields start to trickle higher.
That's so interesting.
And it has to do with the fiscal response function to slowdowns, right? What does a material slowdown that necessitates Fed cutting imply? That means the fiscal is going to be stimulating, right? They're going to spend more money, and the fiscal issue gets worse, right? And the other part of it is just mechanically the U.S. gets worse off every day. The maturing treasuries have a much lower interest profile than the new issues.
Oh, you mean our debt profile?
The debt profile,
yeah.
Right? And so the math actually gets worse every day, including the fact that we actually run $2 trillion plus deficits, right? And so the fiscal calculus gets worse by the day.
Yeah.
And so is it weird to me that you have an opposite reaction in the back end of the fixed income curve relative to the front end? No.
This is all sort of part of the market having effectively finally either come to terms with or called the bluff of the American debt and fiscal situation. For years, it just kind of didn't matter. People didn't trade as if it was going to be inevitable.
Yeah.
And now it's kind of we've had a mask off moment now where the market has figured this out, that like the debt is unsustainable and it
Yeah.
will be a problem.
It will be a problem.
They're finally telling the truth to themselves. Which is,
Well, and that's kind of why. Again, like you've seen gold have an insane move.
Right.
You've seen silver have an insane move.
silver of all things.
Of
It's like
all-
the Litecoin of gold.
Yeah. But you know what's really interesting is like during the April sell off this year, right? The tariff tantrum. Like you actually had the dollar depreciate instead
Right.
of appreciate. And normally when you have big risk off moves, it's like, oh, flight to quality. I need to own dollars.
Yeah, they fled to gold and other things, right?
Yeah, and to other assets. And so it really kind of goes to like, are investors like fundamentally reassessing like the dollar and like what is genuinely like a store of value in an environment where it seems like the central bankers are okay running inflation like a little bit more elevated. And that does, and I will say that does ultimately bode well for Bitcoin.
You have to think it does, right?
You have to, but you have to think about the path that we're going to take, right?
No, yeah.
And like,
And we talked about this too, though. Like, if everything has, all risk assets have primarily gone up this year
yeah,
and ended the year higher, right? If you're looking at one that didn't, that was in your portfolio, like it makes sense for you to reassess the opportunity cost of having spent. You could have had the last 6 months in Nvidia stock, or you
Or
had it
gold.
in Bitcoin or gold. And if you had it in Bitcoin, like you lost money over
Yeah.
the last 6 months. And so, well, depending, you know what I mean? And so that's sort of to me, this is that short term, like, clear it out, like you
Yeah,
said,
exactly.
consolidate.
But
I
the
think-
long run thesis of Bitcoin
Makes a lot
does
of
get better
sense.
every day.
Yeah,
Right. But I just think that like that's not the way to play the market right now.
I agree. Yeah.
And like
It's crazy that that people were fleeing not to the dollar, that the dollar actually went down during
Yeah.
the sell-off. That's like, does that ever
Again,
happen?
no.
Yeah, like that's
Right?
a serious
I'm pretty
signal.
sure like the stat is like 12 of the last 13 10% corrections in the S&P were like dollar positive. This,
Dollar appreciating
correct. And this last instance
was
was
not.
not, right?
So, I mean, that's a very serious signal.
Right, and this is the first time I can remember where like the Fed has cut rates so aggressively and 30s are back at the highs.
Yeah.
Right, like the market is ringing alarm bells, and like ultimately, what most people think will happen is you're gonna have like some version of yield curve control, whether it's implicit or explicit, and there is gonna come a time when the yield is just too painful for central bankers not to intervene. And like when that happens, you're like, you're probably going to be in true price
That's
discovery
a money
in gold
that's a
and
money printing
Bitcoin.
bonanza, right?
Correct. That just tells you like, oh, like the market's called its bluff, and like, what's the solution? We are going to cap where these back end
We're
bond
going to
yields
promise
can
to
go.
buy them, and
But ultimately, like, what does that signal? That means you don't have inflation under control, and the purchasing power of the dollar is probably weakening at like a very aggressive rate. And so it's a very interesting setup, but it's just like, like this is like when are we ever going to try to tackle this? Or are we just going to go with the model that's just like Japan, and you do yield curve control till inflation becomes an issue, then you let it run and you got to hike rates, and
and you just hope that your navy continues to make you the most powerful in the world. I mean, that's basically what it seems like the plan is, which is effectively no plan. Kick the can as long as you can, and then when you can't kick it, like pick it up, break the can, get another can, try to kick that one. That's basically what.
Well, I mean, that's what
there's
it
no
is.
serious long-term plan, is there? There is no plan.
There is no plan.
Oh man.
Like,
what
I mean,
about-
the plan is to print money.
What about Plan B over here? I mean, I feel like
Plan
that's
B, yeah.
this is the long-term
I mean,
thesis, right?
the question is, and like this is the question I ask myself a lot. Like, do we really want to live in a world where like Bitcoin is ripping to 200K, 300K,
We prefer a nice steady staircase up than
steady staircase?
You don't want to wake up tomorrow and see Bitcoin is ripped from 90 to 400K.
You just don't.
Or it's like those headlines the other, which I think luckily was more of just a retail mania briefly that happened
Yeah.
too. But
I mean,
those
those-
pictures a few weeks ago, people lined up around the block to buy gold bars.
Yeah.
That's like, you don't usually see pictures like that in the media unless there's some really bad shit happening in the economy. Like people lining up to sell everything they own to buy gold usually means your economy is collapsing, right?
100%.
And so luckily that seemed to just be like a little blow off top moment that happened for gold and not like, but it's starting to get, I mean, it's concerning.
I mean, it's because if you're an investor of like, you got billions of dollars to manage, like, you don't have any alternatives.
Yeah.
It's not like Europe's doing fantastic.
Right.
The Japanese, like, you have the same issues everywhere. And like, the best house on the block is probably gold and or the blockchain and Bitcoin.
Yeah.
So, I like that. Best house on the blockchain.
Oh, I like that. That's good.
But no, but it's a really interesting setup, and for me as a trader, right? Like, just as a general market participant, like I think about things 6 months out, a year out, and it's really tough to like take my brain to anywhere beyond there. But if you're a policymaker, whether it's on the monetary side or the fiscal side, like, guys, like, we have a problem.
We really do have to figure this out.
We have a problem.
Yep.
Houston.
Well, let's leave it there, my friend Beimnet Abebe from Galaxy Trading. Thank you so much.
Thanks for having me.
Let's go now to Zack Pokorny from Galaxy Research. Zack, welcome to Galaxy Brains.
Yeah, good to be here.
We were talking at lunch about some interesting trends happening in the on-chain environment. Maybe I'll start there. What are you seeing on-chain that has piqued your interest these days?
Yeah, I mean, I think one of the most intellectually stimulating things that's going on right now is in the realm of futarchy.
And tell us again, what is futarchy at the high level?
Yeah, at a high level, it's just governance by markets.
So is it by prediction markets or just by markets at the highest level, technically?
Prediction markets, in a sense, I think a better way to frame it is decision markets. Like, we have a decision that we need to make on something, and instead of using this one token equals one vote sort of model, it's let's use the DAO token as the objective function and let price guide our decision making. So it's not how many people are voting in favor of this thing. It's, is this decision economically advantageous for the token and by extension the DAO?
So is it one capital, one vote, basically, instead of one person? The idea is that capital determines the outcome? Is that fair
in
to
a
say?
sense?
Yeah.
Yeah, I mean, capital drives the price.
Right.
But it has this sort of baked in tamper resistance to it. So it's not just like, oh, I have more money than you. Like, I can sway the outcome of the vote. I may be able to move price, but I need to buy out the entire opposite side.
Oh, so it's like buying a curve of outcome possibilities?
I wouldn't say that as much as it's just price dictates where we go.
All right.
Like,
okay. So there's more. And Zach's written, I think, at least 2 papers about futarchy at this point. So definitely go and check those out. You can just search on galaxy.com. I don't know if people know that we have a search bar. You just type futarchy, you'll find them. I interrupted you so you could give that explanation, but continue. You said things around futarchy.
yeah, and futarchy is kind of coming into the fold of this idea of ownership coins and what does a token actually get you.
Yeah.
I think 2023 and 2024 were kind of the eras of high float or low float, high FDV, and we're kind of working through the hangover of this.
And then
entire thing.
the meme coin nihilism was like a reaction to that.
Certainly, yeah. That did not help. But I think
But it was also like a rebellion against the sort of venture-backed, low-float, high FDV coins, right? Sort of by... It was like I was giving a lecture this week at Columbia Business School, and I was explaining sort of the eras of crypto. And there's many vectors that have been interesting and many ups and downs, surely. But also it's this constant story of creative destruction, where like the argument in 2017 was that venture capital was not accessible for most investors, and so the token, the ICO, the initial coin offering, might be a way not just that new blockchains would distribute coins to investors, to retail, and ultimately their users, but maybe even a deli would do an ICO to raise capital, right? And of course, that was deemed mostly illegal by the SEC at the time, and so as a reaction were these private placement rounds that the venture capitalists started doing as a way to get the coins out. And they necessarily had to design the token so that they had no economic value, basically, or themselves risk them being unregistered securities. And then a reaction to the market getting upset with that over time was the total pendulum swing the entire opposite direction, and total nihilism of useless meme coins. And now are we swinging back? I just want to say it that way because to me, when you say ownership coins, and tell us what those are, but there have been many evolutions of what a token is, right?
Yeah, no, certainly. And I think we kind of, like you said, went through that era of low float, high FDV. But the difference this go around was we actually had a number of successful businesses built around these tokens. You know, companies are making billions to hundreds of millions of dollars a year on chain. But if you were just looking at price charts, you would have no idea.
So you're talking about what, like some of the great DeFi apps and stuff that they're generating lots of revenue, but their tokens aren't trading well?
Exactly. People started to bring into question, like, wait, why is this a $500 million a year business and my token is down 90%?
Right.
And it sort of sparked this whole debate of like, oh, well, the token is actually just kind of loosely associated with this company. Like there's a whole equity
It's not receiving
entity.
cash flow, right? It's not.
Exactly.
Yeah.
And in response to that, we've seen a huge demand for buybacks and
Right.
burns and other, in my opinion, imperfect means of trying to draw
Well,
an
that's
economic connection.
so that's
between
another.
the
You're
two.
right. That's been another step in the creative destruction. Was in response to the thing you're pointing out. Some of the biggest apps started taking the revenue that they are generating, using it to retire items out of their supply, right? To burn supply, which is kind of like again, this is still a lot of this feels shaped by the uncertain regulatory environment, and by the way, not just in some cases uncertain, really just one that they don't like, right? Because if they just like gave dividends to the token holders rather than using the money to buy back the supply, that would very much look like a security. I think a lot of them think, and they don't want to be a security, which is I think that it's not that there's uncertainty, it's that they don't want to be a security, so it's sort of a roundabout way.
You know, the design of the tokens that we have now, or at least the majority of them, are absolutely a response to
You
The-
can't give any value to your
Yeah.
investors, or it might be a security.
exactly.
Yeah. So they're like I'm gonna use it's like lower T tokens. They're like tokens you put in like a machine at a fair,
Some of them, yeah.
right? Or they're like and that's what they're trying to do, is to bring some value to the token by making it scarcer over time, proportionate to their revenue, rather than paying you for holding it.
Yeah, and I mean, it also just comes at a massive expense. It's like, imagine you make $200 million a year, you can invest half of that into growth and product and doing all of these things. Like there are multiple ways these buybacks are just imperfect, and actually in some senses negative for token holders and shareholders in the equity entities that sit
Right.
behind them.
And that's the other thing, is a lot of these tokens have an associated nonprofit foundation, and
Well, that's like
or
the whole issue.
right. Yeah. So what is the ownership coin? What is the alternate model that you're talking about?
Yeah, the alternate model is essentially your tokens actually have a claim on the balance sheet.
So doesn't that
of-
make them a security then? Probably. I mean, I don't actually know. Maybe, but
I mean, I'm
maybe or
not,
maybe not.
Yeah, maybe or maybe not. But the key distinction here is it's not like typical shareholding. It's mostly a reflection of ownership by way of control of resources.
So it's
And-
governance over the balance sheet, basically, like because a
It-
lot of these apps have big on-chain treasuries.
Yeah, exactly. So yeah, like I said, it's not ownership in the typical shareholding sense. It's ownership in I control capital inflows and outflows from this DAO, and if I don't like the direction it's going in, I can raise a proposal to dissolve it and effectively claim the underlying.
Interesting. So
Yeah.
it is kind of it's kind of a reincarnation of the best of the DAO token idea that has always kind of existed. Because we've looked at DAOs for a long time, and there's interesting ideas that are sort of further afield, but at their core, the vast majority of DAOs are just an on-chain treasury, and the thing that the DAO voters, whomever they are usually voting on is how to spend the money, or how to allocate the money.
Yeah, and even in some of those cases, the token holder's ability to actually raise proposals and do things is very limited.
Yeah.
With this sort of new meta, it's a dollar can't go in or a dollar can't come out without.
So it's total control by the ownership coins.
Essentially, yeah.
And are we seeing a lot of projects sort of launch like this now?
Yeah, they're slowly starting to drip in. We have 6 or 7 of them now. But this is a new mechanism that is going to take time to flush out, but I fully expect there to be hundreds of these things over the next year and a half. And I don't see many projects actually being able, like existing projects being able to cross over.
That's what I was going to wonder. You don't think they
Like-
can convert, really?
I think the way they're structured, it's going to be too difficult. Like shareholders and the equity entities behind these things would have to take
Yeah.
a decent haircut.
So are these are fundamentally like fully on chain? There's no affiliated
There is no equity entity.
There's no other entity. It's sort of okay, interesting. It's a more native DAO structure. It's also kind of like community driven in a meme coinish sort of way, in that there's no off chain entities, right? And there's no, or the best of them.
No, you
don't
just have token holders and operators. Token holders decide the direction and what our burn should be, and then it's up to the operators to go.
Is it kind of like, what if there aren't operators? It's like, are there bounties? Does it sometimes go the other way? Like we get together and form a DAO and just like say that we are allocating X number of dollars to build this app, and then the devs show up? Or has it often been the opposite way, where the operators are the founders? And
Yeah, at this point, the operators have been the ones leading the way, which I think makes sense. It's like, I'm a founder, I have this thing,
yeah,
I want to fund it, and I want to give my token holders a good shot at capturing the value I can create.
It's a crazy, like, I mean, I told this part of the way I viewed it as it's really a saga. It's a giant multi-part epic tale of these extremely high velocity permissionless markets constantly hunting new ways to design tokens, and really trying and failing a bunch of, I mean, remember like 3.3 or like
The beloved 3.3.
what were those tokens called? There's a whole class of those tokens. And then, I mean, we've just gone through so many. It's just quite interesting, but it's funny. And I think it's both funny and reassuring that you see this as a new meta that's emerging, because this is much more fundamentally sound. Right?
Yeah, I think ultimately this is how, one, good businesses get built, and two, you just create tokens that I think are more investable.
Right.
Where you don't end up going 5 years down the line and everybody's like, wait, the company has grown its revenue 1,000x
Yeah.
and I've lost all my money.
Literally some of the best DeFi apps ever created, and with the most longevity, had to design their tokens to be explicitly useless, basically. Mostly because of regulatory issues.
Yeah, no doubt.
So it'll be interesting too to see how the SEC, which the crypto task force has talked a lot about some version of Hester Peirce's safe harbor, which is a way to do tokens that have equity-like features without them being unregistered securities. Like what they do rule-wise on the issuance side will be interesting. I know I don't know about my audience, but certainly I have spent most of my time as it relates to the SEC's forthcoming policy changes focused on tokenized securities, which is sort of the opposite of this. This question is, when are tokens securities? And they've signaled that they're going to work on that, but this will probably inform, or certainly be it will certainly have to react in some way to what they decide to do. Very interesting. Should we cover this? This is going to be we're going to be writing reports about this, you think? More and more?
Oh, yeah, 100%.
I'm excited. It's always fun to find a new meta, and it's nice when it's not nihilistic,
Yeah, yeah. And the people that are behind this movement, I think, are some of the smartest, like most dedicated people in the space.
Cool.
Like I think this movement has stickiness. So
I want to change gears. You also published recently one of our best report series, maybe the best one we've ever really done on a recurring basis, but it was our Q3 2025 crypto lending and leverage report. That report will give us just a high-level overview. If people who are watching haven't read this report yet, just like, what does that report cover?
Yeah, I mean, it covers the full stack of leverage, from on-chain lending markets, CeFi lenders, DATs. So we cover a little bit of DAT leverage build-up, and then perps. So kind of like the holy trinity of leverage.
And I think one of the most interesting things you've done with that report is get the CeFi lenders to give you their data, because the on-chain stuff is there for all to see. It certainly you've cut it up beautifully in this report. So if you want to, get good looks at what like debt markets look on like and credit markets look like on chain, go read the report but that data is available on a public permissionless blockchain.
It's technically public.
Yeah, the CeFi data, however, is not. Like, what's it been like working with them, and maybe also what is the sort of like top line? Not like who are the biggest CeFi lenders?
Yeah, I mean, Tether is just a giant. They came in with like $14 billion worth of open loans last quarter, which is just insane.
We're relying on their public attestation document for that, right?
Yeah. We disclose all of this stuff in the report.
All the methodologies and where the data comes from.
Yep, exactly. So we just pull Tether straight from their public attestation, as the entire industry does. And then Nexo and Galaxy round out the top three. So you kind of have big stablecoin issuer, Nexo, which I believe is like a bit more retail focused.
Retail lending for a long time.
Yep. And then the more institutional view.
Yep.
Through Galaxy.
It's quite interesting. And then I should shout out, I think, other third party. So Galaxy's also, we don't, believe it or not, take the information from the people we work with. We pull the information from Galaxy's public financials. Same with Coinbase. We also pull from their public financials. But there is a cohort of other lenders that, including Nexo, that provide us their numbers. Unchained, Arch, Signum, Ledin. I think primarily Figure in the past.
Figure as well, yep.
And then you also, to start that chart, and I'm going to, we've shown the chart on the screen at this point. So we can show it again here. But the whole front part of the chart is like pulled from bankruptcy docs and stuff, because the lender profile in CeFi has dramatically changed, basically. Like Galaxy was around, Tether was slightly around during the prior era.
Yeah, I mean, it was like the BlockFis and
Genesis.
And Genesis,
Voyager
was massive.
Massive.
Yeah. And
you had to go pick through the bones of their restructuring filings to find data for those ones, quarterly data.
Yeah, me and ChatGPT reading and scanning through. Yeah, maybe even close to 10,000 pages of bankruptcy docs. And
it's a very cool chart. It's one I know that makes me really excited because no one has ever published it before, and now we've got a pretty good roll. I think the ones that that are giving us their data are also seeing good value from it. So, what do you? Are we near all-time high leverage? Are we all-time high in a notional terms?
Yeah, that was sort of the irony of the Q3 report, because we did make an all-time high quarter over quarter
in September, but that ends September 30th.
Yeah, that was like the whole thing. It ended September, and then 10 days later, we had obviously the huge liquidation event.
Yeah,
and it was like, all-time highs, but
like
not for long.
Yeah, exactly. But not for you. You know that guy who's like, call an ambulance, but not for you, and he pulls out like a gun or whatever.
Yeah.
Yeah. Well, it remains to be seen. It'll be very interesting to see how it looks. I mean, we've pulled them. We know how things like OI and on-chain have been affected and declined and then stabilized, and then since October 10th. But one that we don't know and will be interesting will be to see if there's any lasting effect on the CeFi lending space. If it continues, it's basically been on a steady march higher.
Yeah, for much of the last 2 years, 2.5 years.
Yeah. It'll be interesting to see with this, both the leverage wipeout of October 10th, but also just prices pulling back. Like, where will they finish Q4 will be interesting to see.
Yeah, I mean, I think when we look at the lending landscape as a whole today, it looks a lot different than it did 3-4 years ago. Like, uncollateralized lending is not as much nearly a thing. Maybe some lenders still practice this, but I think it's kind of become like universal consensus that like we just
can't do that.
Yeah, we just don't. we just don't do that.
Yeah.
And then even looking at the on-chain side, like 2020, 2021 was people borrowing against random DAO tokens to go farm 2,000 APY fruit apps.
Yep.
Like, we just don't really have that anymore. Like, the collateral composition and the things that people are doing with borrowed funds has changed. So, I mean, I wouldn't be surprised to see CeFi continue marching along, especially with the divergence between sort of the institutional focused people versus like the crypto natives. Like there's a
mean, the-
divergence in opinion and agenda, and I could see CeFi sort of continuing the momentum from the summer through
And-
this year. I wouldn't be surprised at least to see it.
On a market share basis, so you sort of like break the lending the sources of borrow into three categories: CeFi, DeFi, and then CDP stablecoins, aka like Maker, and kind of vault stablecoin where technically it is lending because you're borrowing this created stable off of
But
collateral.
it's just a synthetic.
Yeah, it's a synthetic stable
yeah.
basically, but it does involve borrowing off of assets, and they can get liquidated. So we include of those three categories. Historically, CeFi in the past, and that prior was dramatically larger. What does the breakup now market share wise between those categories look like? Is DeFi
Yeah, I think it's
the
like
biggest?
Yeah, I think it's like 60 or 65% DeFi, like including
Wow.
CDP stablecoins. So, I mean, but that's just sort of a function of accessibility. Like when all of the CeFis blew up, like
It's just so fascinating though.
Yeah.
Like that's just a regime change from 21 to, and I feel like it speaks volumes about the stability, the amount of trust people have for the on-chain environment. Obviously, it doesn't mean every app or anything like that, but like that's a pretty important win for like blockchain sovereign use of blockchains. Even if some person or business is using a custodian, someone is operating directly on chain to facilitate that, whether it's an individual or a third party doing it on behalf of someone else. Like that's pretty impressive.
Yeah, I mean, the apps just didn't go anywhere. Like
Yeah, they did
Maker
fine.
is, or Sky now, but still around. Aave, 60 billion in TVL. Even Compound, like not used nearly as much anymore, but been around since what, like 2018, 2019. Like the OG pooled liquidity lending protocol, still here, still works. I mean, yeah, I think it speaks volumes. It's like conditional rules based pooled lending actually works.
It works and
Yeah.
it has a place. And with the blockchain as infrastructure having improved a fair amount over the years, I mean, both Ether and Solana, one of the big reasons that March 12th, 2020 had a big leverage unwind was because of like scaling problems on Ethereum, basically. The fees just spiked so dramatically that you couldn't get in any transactions to say top up your collateral and stuff like that. And it created like cascades. And then I think even oracles had gotten priced out of sending in the prices. That we haven't seen a problem like that happen in a long time.
No, I mean, you have chains like Solana, now like you mentioned, that can handle
Especially
much bigger load.
and right there, localized fee market stuff makes it like, even if there is congestion in one app or type of app, like there's still other highways to go in. And
Yeah, and just the baseline load that the network can handle is significantly higher. But yeah, when we think about lending markets, though, it's really more about the collateral assets, not so much the performance of the network. Like how often?
that's what I'm saying, almost
like-
never, but we haven't had one. I mean, you had some outages in Solana over the years, but again, it's all of that stuff is
It's
improved.
pretty rare now.
The sort of hub and spoke L2 model on Ethereum has performed pretty well for Ethereum. So yeah, what do you mean the cloud? Like, why is the lending activity so much larger in the Ethereum world than in the Solana world?
It's really just a story of quality liquid collateral.
There's just
Like-
more of it on ETH.
Yeah, it's like when you think about what lending is as an activity, it's not high velocity. You don't need to worry about like micro structure of the market, like execution price. It's, do we have a lot of high quality collateral? And that's just the entire thing. Like if you're sitting on a chain that has $10 billion of Bitcoin that you can borrow at 70% LTV against, or whatever Aave lets you do now, like you are by default just going to have significantly larger lending markets because the collateral is the fuel. It's not necessarily network performance. It's not DEX infrastructure, whatever it might be. It's, do you have quality collateral that you can underwrite pretty aggressively, and can it scale?
Yeah, it's very interesting. And so it's also a function of time then, right? Ethereum's just built up a bigger market of collateral over is that stuff sticky?
Oh,
It's just
absolutely.
sticky.
I mean, part of what makes Ethereum so successful at this is, one, the amount of wrapped Bitcoin it has.
How much does it have?
Aave alone has a few $1 billion. Then you throw in Morpho, which has gained significant ground over the last year. We're probably looking at every bit of
That's crazy.
$10 billion, maybe.
You had once put out a chart, and I won't hold you to whether it's still true now, but that actually like Bitcoin is the biggest.
Yeah.
Basically, why?
Yeah, as an individual asset. So like if you took like
every staked ETH and
yeah,
whatnot,
because there's like all of these LRT, LST, like ETH derivatives, which also contribute to the success of Ethereum. It's like if I can have an ETH pegged asset that accrues staking APY, that's 5-6 billion market cap and liquid.
Yeah,
like that's actually
that's
like
a pretty good asset
by like on-chain DeFi collateral standards.
That's good.
That's very good, and most networks don't have that privilege.
Right.
But yeah, like
but
Bitcoin.
Still, the number one single asset is wrapped Bitcoin.
Yeah, I made that chart about a year ago. I need to.
Yeah, I don't know if it's still true.
Yeah, I need to relook into it because now we have like Pendle tokens and stuff, which hit or like all like Athena and Pendle issued assets almost hit like $7 or $8 billion as well. So like that has become
the
a
story's
significant
definitely
source.
evolved since then. But I think one of the interesting parts about it wasn't so much that it was, and yes, it may have been number one then, but if you combined like ETH, WETH, STETH, other LRT,
like all the ETH.
Yeah, then they were certainly bigger. But like, why would it be big? I mean, that's quite interesting because, whether it's WBTC or CBBTC, which is Coinbase's, like they're I don't know as much about CBBTC's contract, but wrap Bitcoin's quite permissionless for a centrally issued sort of stable coin type asset. It's really interesting. There's no admin key for that. They can't freeze or revoke that one. We looked at this once, which is quite interesting. Like it's more permissionless than like a stable coin is actually. But like still it's issued by a central issuer. Like from a risk perspective, as a lender, wouldn't you prefer to hold something like ETH than a wrapped version of Bitcoin? You know what I mean? It seems like that adds a vector of credit risk to the token that doesn't may not exist for an on-chain issued one.
Yeah, like investor protections as well. And like, I mean, somebody has to issue the thing regardless.
Yeah.
So like the issuer risk, I think, kind of exists broadly.
I do think that if the lenders don't typically disclose the stuff, the CeFi lenders, but I bet you the vast majority of CeFi lending collateral is native Bitcoin, not native ETH, not wrapped other stuff. I would bet like 60 to 70% of all of all collateral held by CeFi for the lending that they do is Bitcoin specifically.
Yeah, I think that's probably a fair assumption. And even looking at what some of the DeFi protocols are starting to do, like native Bitcoin is actually starting to become a demanded collateral type where the Bitcoin still lives natively on
so you just like they build some kind of like wallet that they have their own Bitcoin wallet and they somehow oracle that it's arrived back to the
like
other
today
chain.
it like exists as a multi-sig.
Yeah, it's a multi-sig, but like they can still accept it.
Yeah, so we're starting. I mean, the demand for Bitcoin as collateral is pretty wide.
So Zach, you've been in the crypto industry for a pretty long time for a younger guy. Before you worked at Galaxy, you were at CX.io, right? Which is a crypto exchange.
Yep, Europe-based exchange.
What's your sort of like backstory here on getting interested and involved in crypto?
Yeah, it really started from the hardware side of things. Like I was super into like video games and building computers and all that stuff, and had built a computer, and it was like, oh, like, well, what can you do with this thing? And it's like, oh, well, you can mine Bitcoin, and I was like, oh, that's really cool. I started doing that and realized you don't actually make an overwhelming amount of money mining Bitcoin off of a GPU. But then it was like, oh, you can mine Ethereum and all of these random like Bitcoin Cash, like all of this random stuff that started popping up, and just kind of went down the rabbit hole from there. I had big GPU mining rigs in my off-campus house in college.
No way.
Really got into it from the hardware
That's
side
cool.
and fell down the rabbit hole from there.
You work a lot with data, which is no surprise for a researcher in crypto. How does if we just think about the big three blockchains, Bitcoin, Ethereum, and Solana, like how would you characterize the differences in handling data for these? Because those are three that are quite different from each other.
Yeah, I mean, Bitcoin is kind of a dinosaur.
Yeah.
With the data, like there's not an overwhelming amount of stuff to look at. It's just inputs, outputs. Like I actually find the most fun thing to do with Bitcoin related data is like input output tracking. So like seeing like where the coins go, because there is like a privacy element to the whole input output
Yeah,
model.
people don't realize the UTXO model, as it's called, is significantly more private by
It becomes quite hard to track.
than the account based like design that basically all the other blockchains use.
Yeah, and like even like tracking UTXOs, like they can literally run forever. Just it like to one address,
Yeah.
it gets emptied out, it goes to another one. So it becomes. I mean, it's it's kind of dinosaurish,
especially
but
like
it's fun.
criminals that exist. They use like sophisticated, kind of like beautiful from a topographical standpoint. Like
Yeah, it looks.
they call
awesome.
it peeling and like these crazy things where they blow coins out into like to one new address and then take like 10 coins from it 1,000 times, and it ends up looking like in a sort of a visualizer. It looks like a centipede, right?
Yeah, or just like this like galactic explosion.
Yeah.
I love making the node charts with the UTXO data because you can create these beautiful labyrinths.
But to your point,
pictures.
right? There's no like stateful like execution environment in Bitcoin, so you don't have whole on-chain businesses operating solely on chain like inside of an EVM. So then you get to Ethereum, and you've got all of this explosion of interesting applications to look at. But it's also still quite difficult, right? Like, how do we aggregate the economic data from this endless explosion nebula of applications? Like, if I ask you, like, and you do this for the lending report, I know. Like, if I ask you, like, what is the borrow rate for wrap Bitcoin in DeFi on Ethereum? Like, you can just go to like Aave and find out, but like there's more to it than that, right? Like aggregating across all these markets.
Yeah, I mean, it's really just on like a contract by contract basis. So it's like we can go to Aave's pool contract.
But
Like,
you have to know from research all the ones to go to and aggregate. If you wanted to like make an index, for example.
yeah, that's honestly the hardest part of like observing on-chain data is actually finding the contracts.
Yeah.
Um,
Knowing what to
we-
look at.
Well, yeah, knowing what to look at, but we also have, and I mean, it's like an industry-wide issue where documentation will tell you how the thing works, but it won't actually tell you where it comes from. But the beauty of what we do is like it's still there. You want to know what contract your wrapped Bitcoin goes to when you deposit into a random Morpho vault. You take $5 and you go do it, and then you look at the block explorer and you go, oh,
There it
that's
is.
exactly where this came from.
Yeah, that's so interesting. You have to like seed the chain and then track the little bits that you send off as a way to sort of discover. It's like almost like when you play one of those RPGs and it's like the map is not revealed until you walk there, right?
Yeah, you're just constantly discovering the map.
Yeah.
Yeah, and I mean that's at least how I think about it on the desk. Like you can do broad analysis of the network, but I find it to be much more beneficial to just go to the hotspots of activity and just drive as deep as you possibly can. But yeah, ETH is easy. It's just go to the contract.
Then I got to ask you about, okay, so then we've got this behemoth of Solana. What is the issue? I mean, the people know this. It creates a lot of data. That's sort of the trade-off. Like, it's expensive to run a node, right? That's sort of, Ethereum sort of falling in Bitcoin's lead has tried to make it very cheap to operate a node or a validator in service of widely decentralizing the node and validator accounts. Same idea with Bitcoin nodes, which are, famously can be run on a Raspberry Pi and stuff like that. Solana took a different approach to this, right? In general, they said actually like it's okay to have like the beefiest to need one of the beefiest computers ever just to operate this thing.
Yeah, the nodes are like hypercars.
Yeah, why is that? What is it? Because they're processing so much information or storing so much information?
I mean, it's both.
Yeah.
Like, there's a ton of data that the network produces.
But surely, like, there's not like, is there significantly more real economic activity, or is it just like there's a bunch of junk data you have to like sift through to get to the information? Like,
Yeah, I mean, like if you think about it, it's like Solana does like 1,500 to 2,000 TPS on a good day. Ethereum is doing 15 to maybe 20.
so they're really.
So,
But are
like-
those transactions per second? Are they real economic transactions or like user initiated actions, or are they also storing other information? Like,
I mean, the transactions could be started by bots. They could be started by
No,
humans.
okay,
Like,
yeah, but they are like transaction. It's not like votes and stuff like that by validators. Don't they store
oh, I
those
mean,
too?
a portion of them, yeah,
Yeah.
are votes. I'm talking like non-vote transactions, like actual, like
That's
you
a
said,
lot,
like
so it's just a lot more.
it's just, yeah. I mean, the scale of the activity is
So why can't
uncomparable.
is are you able to run? I mean, we can run a whole Ethereum archive node and index the whole thing ourselves. A person can. Can
Yeah,
a
the
person not
indexing
do
is
that on
kind of-
Solana?
I mean, running the hardware is not an easy task. And then also when it just comes to the data structure and data organization of the chain, like Ethereum has this thing, like anytime there's an event, you just say get log.
Get
with
me the event.
With like the fingerprint of the event. Solana doesn't really have an equal comparison. It's a lot of like parsing strings. Like you can map things back to IDLs, which is essentially like a format for decoding and getting an understanding of what's happening in a contract or a program. But doing so is just not easy. Like the sheer amount of data, and then finding the best way to organize it and keep it organized over anything is a real challenge. Very few people in the industry have,
Right.
in my opinion, found a good way to build like a general index. Like we have like a bunch of services that do it, but it's just very tough. And
so
it
interesting.
shows. I mean, there's only a few data providers that have really figured it out.
Yeah, that's really interesting. Like, it's interesting how different those three are: Bitcoin, Ethereum, and Solana from each other. And I really like that those are sort of the three leaders, and that they are different. Like, there's reason for them to be leaders because they're differentiated from each other, right? It's not like, because there was this whole period with like in 21 when you just had like a bajillion EVM chains. They're all
Yeah, you
basically
just had like
the
essentially
same.
an ETH fork with like a slight
Change.
Yeah.
Yeah. And I mean, there are still, I mean, I guess the ones that people are interested in now are Monad, which has just launched because it's kind of tries to take the best of ETH and the best of Solana, like in a way, right? Is sort of the idea. It's parallelized execution the way Solana is, but it's an EVM.
Still EVM.
So like, it could theoretically get easy access to developers that know Solidity or EVM stuff. And then Mega ETH is the other one, which is also sort of a different approach. That's an L2, right? And they basically say, it's kind of like they take Solana's approach to the central
Yeah,
sequencer.
let's just have like massive beefy sequencer. It's kind of like Eclipse, I think, in that sense, which is an SVM roll up, just like.
So one says I'm gonna smash Monad's trying to smash the two together. Mega ETH say I'm gonna do the thing that Solana does, but as an ETH L2 kind of. I mean, it's just interesting. Those are both new ways to think about it. I don't know that they'll be differentiated enough in the end to like earn one of those vaunted spots of being, like a top differentiated blockchain. But I feel like it is interesting because there was a huge game of the L1 wars. The L1 wars have kind of subsided, right?
I think at least the general purpose L1 wars, where it's like
That's a fair point. Maybe,
Solana, Ethereum, like Solana is kind of running away with it. Like they've built the flywheel of like we have the users, the developer activity is coming, and then they're also quite good at like marketing and comms and keeping like specifically the developers engaged. But I think there's a whole open ocean for this idea of like hyper specific.
So like,
It's
almost like app chains are back, but it's all. Do you think it's like, is it corporate now? Like, is that because like you got Tempo, which is Stripe, Arc is the name of Circles that's gonna launch. It's gonna be an L1.
Yeah, I
guess?
mean, I think those chains are also going to be general purpose, but theoretically, like it can come from anywhere. It could come from a crypto native company that just finds distribution. Like that's kind of the frontier of the competition now. It's okay, we have like most of the infrastructure and like the technical capability that we need to support current use. But who has the users and who's going to bring them? That's, I think, the frontier of all of the competition now.
It's gonna be interesting because like obviously Coinbase has Base, which is 80 to 90% of all Ethereum L2 activity. Kraken has Inc., which I think is also basically it is an optimistic roll up, also similar to Base.
Yeah, I think they're actually pivoting towards a based.
That's what they
Roll-up
said, which I
design.
think is
Yeah.
which is good.
Yeah, it's very cool.
Because that would be more decentralized, is the idea, or less centrally controlled is maybe a more accurate way to say it. And then didn't OKX, weren't they launching one? But I think it's an L1. I think this was it's like there's some.
I've honestly lost track of all
I know,
of the
but there's
exchanges.
a lot, and like and obviously you have BNB, and like it's just interesting that you've got some doing ETH L2s, others doing their own L1s. Like I think OKX actually did it as like an app. It's basically an app on Solana. I think it's not even its own L1. It's like
Oh, I think
remember that thing?
Yeah,
We wrote about that, or we looked at it.
Yeah, or it might have been Bybit.
Maybe it was Bybit that
Maybe.
did that.
Yeah, no, somebody just launched like a straight up like smart contract application on Solana.
It's like cool,
Yeah.
yeah, but I like the differentiation. It's so interesting. So you think the users are mostly the most important thing to bring?
Yeah, I mean, like
we could do it as a L2 or an L1. Doesn't really matter unless we bring users.
yeah, essentially, it's like because like who's gonna use this stuff? Like we can build this. We could build anything we want, more or less at this point. Like if there's nobody to use it, then you don't have a business, and that kind of ties into the conversation we had earlier about like what is this token I'm investing in? Like what is the company behind it? Like are there real economics here? So it's all kind of becoming like this self-fulfilling flywheel of things where it's like if you don't have users, you're probably not going to win no matter how differentiated or fancy or whatever your chain might be. Like if there's no one to use it, like you're just not going to win.
There you go. This has been a great conversation. Thank you so much, Zack Pokorny from Galaxy Research.
Yeah, appreciate you having me.
That's it for this week's episode of Galaxy Brains. Thank you to my guest, Zack Pokorny from Galaxy Research, and our friend Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend, and we will see you next week for a special episode. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXYResearch. See you next week.